Jerome Powell spoke yesterday. Rates stayed at 3.75% as expected, but the market reaction is where the real information is. It's really a rotation market. We've seen huge rotations into different sectors, and it's not a risk on play. Okay, so this isn't panic, as you can see here on the QQQ chart. It shows that the market's still showing some momentum in large caps, and in the S&P 500, we moved all-time highs yesterday before we had a bit of a sell-off. So it's not really a panicking market, but I think it's getting to a point where the buyers are exhausted and there's no real fundamental reason for this market to move up higher just yet. Okay, so it's a fairly calm market, grinding up higher, and it could easily grind up all the way to okay on the S&P 500. This is the ETF, and it looks relatively stable to me, with rotations still happening in various sectors. The VIX ticked up, so we had a move on the VIX higher today. It's holding this trend line, and my worry is if we don't reject around this 18 level, we could see a huge spike here. There are some tensions geopolitically: Iran, US, Israel, Iran. There's also other issues going on with Greenland, the EU, tariffs, etc., which could easily lead to spikes in volatility. But it's waking up essentially, and we have to be very cautious here with monitoring volatility, because that should and will most likely lead to sell-offs in the S&P 500 and the broader market. Energy keeps acting like smart money is moving into it. As you can see here, huge moves and a huge gap today on energy. Energy is grinding up higher. Where I'm looking for opportunity is actually utilities. So related to energy, utilities could be quite good in the next few months. I think there'll be some rotations going into utilities, and I'm also looking at cybersecurity here. I think if there is an attack on Iran, or if there's some sort of conflict that happens, cybersecurity will spike up. Government institutions will try and strengthen their security levels, and I think the sector could do fairly well. We're seeing in my community, TrendHunters, we're seeing nice moves in aerospace, and this has been one of our better performing sectors. We've traded energy stocks as well, although we might end up getting shaken out on a few opportunities, but it's been relatively good. Energy, gold, and aerospace and defense has been very, very nice. This is the reason why, as you can see here, nice trend since mid-December here, moving up higher, and it looks like it's consolidating for a new wave up higher. Okay, so it looks essentially to me where rotations are going and where smart money is positioning. In terms of the market, and if we're looking at semiconductors and the broader market, what I will say is semiconductors are doing relatively well now. I felt like we could get rotations back into software. However, I think semiconductors are looking quite stable here, with Nvidia just showing that move. I don't have the Nvidia chart here, but I do have a momentum versus value chart. The reason why value has done so well, in my opinion, is because the market no longer has that euphoric buy-in going in to the new year and the latter part of last year, and money and cash is flowing into, like I said, energy, undervalued tech stocks, undervalued healthcare stocks, and aerospace, which was relatively undervalued compared to the broader market. But I think value is doing a little bit better right now. As a momentum trader, I'm suffering a little bit here since the end of since mid-September with the volatility, but we could easily see a spike up in momentum, and this could move higher here. Final bit that I want to cover is gold and metals. Gold showed strength post the conference where Jerome Powell spoke to the media. Very, very good in terms of movement there. However, it's looking a little bit euphoric. I think now we're getting to a stage where we will see a significant consolidation and a dip. We could still be early. This could still shoot up higher. I think gold prices are around 5,400. It could easily move a lot higher here. Clearly, the market is fearful. There are worries in the market, and the market feels like it needs to go to safety. It needs to go into gold. The dollar has dropped as well, so it kind of makes sense. Gold has been a good play for us. We've played it at various stages. We've tried to play around these stages here early November, December, and then we end up playing around these stages as well. Trading some opportunities around these levels. In terms of other things that we can discuss, what I will say is everything else I will be covering in my TrendHunters community. That's where you're going to see all of my analysis throughout the day. So go there for breakdowns on my daily market watch analysis, my watch list that I have every day, and it's handpicked by me, stocks and cryptos, and also my positioning where I update you guys on the performance of my portfolio. So overall, the market's looking fairly good. There's a bit of volatility. Leaders are clearly in aerospace, defense, energy. We have some semiconductors now moving really well. So there could easily be rotations there, and those could be moving well. But other than that, I'm very, very cautious in the markets because I didn't see the right movement post the Fed interest rate decision, and maybe we're waiting for other fundamental reasons. February is also a negative month typically, and around mid-Feb we see sell-offs in the market, so we have to be very cautious, bearing all this seasonal aspects in mind. Right, so I'll see you next time. Take care.